Hey everyone, I wanted to do a quick video going over this bit of news from Turtle Beach, seeing as though they're one of my biggest holdings, and I did cover something about the situation a few months back, and this is a bit of an update to the saga. If you recall, a couple months ago, I did a video going over Donerail Group offering to buy out Turtle Beach at something like $36 a share, which was a pretty big deal since it was quite a bit higher than the share price, and certainly still is quite a bit higher than the share price. But they recently put out this new press release. Well, it's a couple weeks old at this point, but the news is still pretty fresh. So it reads that the Donerail Group released a statement on Turtle Beach Corporation, and they basically, through this article, talk about how they are continuing to try and buy the company, or at least that's what they're claiming. Turtle Beach does give a response to this, which I'll get to in just a second, but let's just kind of set the scene right here. The Donerail Group is one of the largest shareholders of Turtle Beach Corporation, with beneficial ownership of approximately 7.4% of the company's outstanding shares, and released the following statement on December 15th, 2021. That's what this press release is. Now flag that 7.4% because Turtle Beach has something to say there. Anyways, spanning nearly 4 months since our last public commentary in August, Donerail has attempted to work constructively with the Turtle Beach board of directors as it tries to buy out the company. Now, for a little context, if you didn't see that last video I mentioned earlier, Donerail put out an announcement a couple months ago saying that they were trying to buy the company and that they were putting forth all these great efforts, but Turtle Beach responded saying, hey, this is pretty overblown. You're not really trying all that hard. You don't really seem like you're that legitimate of a buyer. At least that's the sense that I got. And that's kind of what the announcement was saying. Donerail has just come back swinging again, saying, hey, we're still a super legit buyer. So let's continue. In these recent communications, Donerail has provided a multitude of strategic options for the company to pursue. These include a reaffirmation of Donerail's previously disclosed bid to acquire the company, detailed terms under which Donerail would feel comfortable to sign a limited non-disclosure agreement, and 3, an offer to aid the board in a strategic review to maximize alignment with all shareholders. In general, in the last announcement and in this one, they say that they don't like the direction that Turtle Beach is going in general, and they think that if they were in charge of the company, they would do things in a better way to maximize shareholder value. At least that's what they're claiming. They don't really offer much in the way of specifics, but whatever. It is with regret that we report that our efforts for cooperation and productive conversations have largely proven unsuccessful. Ah, shucks. As has been publicly reported, the board rebuffed our previous offers to acquire the company, which culminated in an offer of $36.50 per share in August. In doing so, the board specifically cited 2 concerns: that the board did not view Donerail's proposed acquisition price to be sufficient, and that the board had concerns regarding Donerail's ability to consummate a transaction and its financing sources. And I think that's a much bigger point, which again, we'll get to in Turtle Beach's response. They say that we respectfully disagreed with the board and believe that an offer of $36.50 was clearly adequate and fair. And then they rub it in a little bit and say, in hindsight, that offer looks particularly attractive, standing at a nearly 70% premium from where Turtle Beach's stock price closed yesterday. Yeah, sure, fair enough if you're looking to cash out now. With regards to the financing concerns, or financing concerns if you're a business major, while we have provided the board and its advisors with a comprehensive amount of supporting documentation regarding our prospective financing that details our financing partners and structure, what we have provided appears to be insufficient for the board to relieve them of significant concerns. They proceed to complain and say they don't know what they should do to actually clear up the proposal. And then they say that they're still interested in acquiring the company, and they'll be submitting a revised letter of intent to the company in short order. The revised letter of intent will likely include an offer at a lower price than $36.50 per share, but at a price that we believe to be both an attractive premium to the current trading price as well as to the 30-day volume weighted average price of shares. The next section, they basically complain about the company's share price and say that they're not trading at nearly the same multiple that they should be, and they're at near 52-week lows, and they've declined quite a bit in the last 6 months after doing a pretty significant run-up to be totally fair to Turtle Beach, because, I mean, you really never know what's going to happen in the short term with stock prices. But anyways, they complain about that. They say that 3 of the company's peers have either been acquired or have received acquisition offers in recent months. And if they were to assign the same multiples to Turtle Beach as those other companies, that would imply a much higher share price. So they think that they can find a way to tap into that multiple expansion. At least that's what this letter is claiming. And they conclude that recognizing that we are in the midst of a global consolidation in the video game peripheral space, we have suggested for some time now that Turtle Beach should test the market to assess the appetite of strategic buyers, and then they offer themselves as one of those potential strategic buyers. They then call out Turtle Beach for hiring Bank of America to launch a sales process for the company without actually confirming that they're trying to sell the company, and the fact that they haven't been confirming that they're trying to sell the company has caused confusion in the marketplace, so says Donerail. Further on, they say that we call on the company to publicly disclose that it's running a strategic review process if such a process process is underway, and if it's not, we call on the company to initiate one in short order. They're trying to get the company sold or try to get some bidding going or try to get the appetite for selling the company higher, I guess. Or as they say, indeed, the board continues to repeat its doubts about the level of seriousness that we have in acquiring the company, and we likewise have doubts about the board's willingness to sell the company at such an attractive price. We believe that public disclosure of a strategic review process, while potentially disadvantageous to our efforts of acquiring the company, would create appropriate accountability for this board and do well to provide shareholders with a full and transparent understanding as to the actions that the board is undertaking to create shareholder value. They're trying to put pressure on the board. And they wrap up by saying that they want to enter a customary non-disclosure agreement and get the strategic review process going and try to acquire the company. So that's what Donerail has to say. Now let's get to Turtle Beach's response. 5 days after receiving this letter, in a very similar way to the last saga of letters from a few months ago, where they responded to Donerail's pretty much accusations, I would say, Turtle Beach Corporation responds to misleading statements by Donerail Group. Moving on down the article, here's a quick summary of what the board is saying. The board continues to be open to strategic alternatives that maximize shareholder value. Of course, they have to say that. This is a normal ongoing responsibility, which does not necessarily benefit from public disclosures that could be damaging to the continuing operation of the business and employee retention. Maximizing shareholder value with respect to a strategic alternative necessitates a careful weighing of the intrinsic value of the company's business against a one-time near-term exit price. So basically, they're implying that the company is worth more than that near-term exit price, even if it might be more convenient to sell it like that. You don't have to wait for the market to figure out what your intrinsic value is. They think that the intrinsic value is high enough to justify holding on rather than selling right away, but that's not really the only qualm they have here. They do emphasize that short-term fluctuations in the share price, especially ones that are market or sector-wide, should be understood as such when evaluating the value of a business. So they are saying that volatility is par for the course. And they do push back on Donerail saying that their stock has performed so terribly by saying that the board remains highly engaged in overseeing the strategy of the company, which has generated significant shareholder value, over 350% return in 5 years. Moving on down the press release, they say what Donerail said, that they're reaffirming the price and what the strategic review, and they say that this contradictory messaging is just the most recent of Donerail's attempts to mislead investors to advance its own private agenda, a campaign that has also been accompanied by a number of articles repeating unsubstantiated, false, and misleading rumors strikingly similar to the disinformation promulgated by Donerail. So suggesting that there's a bit of a smear campaign going on. Even its repeated claim to be one of the largest shareholders of the company exaggerates its ownership position, as more than a majority of its ownership is through out-of-the-money call options, which may not align its interests with those of the Turtle Beach shareholders. And that's kind of interesting. I didn't realize that a lot of it was owned in options. I don't recall Turtle Beach saying this in the last time we had this sort of back and forth between the two parties, but that is interesting that Donerail's interests might not be aligned with what a long-term shareholder might want, because they have time decay on these options and generally might have more incentive to sort of pump that share price in the short term if they're trying to hit whatever that strike price is. It's a little fishy, to say the least. Turtle Beach does say that it has not found investor sentiment to be supportive of Donerail or its proposals. So they've been trying to gauge interest on this, and apparently it has not been so good if we take this at face value. Turtle Beach says the board has attempted to engage constructively with Donerail over the past 10 months, and in fact, they've readily made themselves available and spent significant amounts of time meeting with Donerail to listen to its views on the company and evaluate its acquisition proposal. And here's what I think the key part is: during that entire period, Donerail's behavior has not been consistent with the actions of a credible, legitimate buyer truly interested in or capable of effecting an acquisition of the company. They've authorized the company's financial advisor, Bank of America Securities, to speak with Donerail to ascertain its sources of equity and debt financing in order to complete the transaction. They're just trying to see, can they actually pay for the company if they go ahead and go through with an offer. To date, Donerail, which has never actually closed an acquisition of any company, much less of this size, has remained unwilling or unable to provide adequate substantive proof of financing despite claiming otherwise. As an example, shareholders can view one of the financing commitment documents in the exact redacted form that it was submitted by Donerail, available with the company's Form 8K filing on the SEC website here. Let's go take a look at that real quick. So here apparently is what Donerail sent to Turtle Beach in their sort of offer package, trying to show that they are a worthy, credible buyer with financing available to actually buy the company. If we go ahead and scroll through here, there's not a whole lot. You can see there's this clause right here. It says that there's a limit of $200 million in aggregate, I'm guessing, loan available, or just money that they can use to actually fund a purchase. So $200 million, whether it be in debt or equity. I think this is equity because it's a management agreement, but whatever, we'll call it $200 million. Well, the company itself is closer to $500 million. So if that's really it, and also this is so vague, it's just one line on a piece of paper, and pretty much everything else is redacted. We see here that the sub-manager, which is Donerail, I believe, they have full discretionary investment and trading authority, so they can use that $200 million for whatever. At least that's my understanding here. I'm not seeing the whole document here, and there's a lot of things that are cut out here, so I can see why Turtle Beach would be a little bit nervous, because I don't think there's really much else in pretty much this whole document. And yeah, I'm still scrolling, nothing. Yeah, pretty much everything's redacted except what we just saw. If we go back to the press release, Turtle Beach says we continue to have significant concerns regarding our financing capabilities, because it doesn't look like they really have much information to go off of besides what they just showed. And instead of responding to the bid procedure letter provided by Bank of America Securities with the information requested in order for the board to evaluate its purported offer, Donerail chose to publish another misleading public statement. So there's a bit more bad blood between these two parties. Nevertheless, the board remains willing to entertain further engagement consistent with its fiduciary duties on Donerail's acquisition proposal under customary processes and procedures to determine if Donerail is able to demonstrate an ability to credibly and adequately finance an offer at a price that maximizes values to all shareholders. And that's something they have to say, because the board has a fiduciary duty, as they say, which means that they have to put the shareholders before themselves. They're trying to maximize shareholder value, and that's pretty much their sole duty. Now, they do have quite a bit of discretion in how they do that, generally speaking, but they can't do unreasonable things like maybe taking personal grudges that don't make any sense relative to what's going on with the business. They really do have to put shareholder value first. But that doesn't necessarily mean that they're obligated to sell to a company that just comes by with an offer. It really depends on a lot of different factors. And Turtle Beach stock hasn't done all that great over the past 6 months. It's down something like 25%. It did jump about 15% on the news, but still quite a bit off their recent high in the last year. And it did drop another 8% pretty much right after Turtle Beach gave its response, kind of dousing the flames of this apparent offer. But I think it's interesting to see how the incentives of different parties may not line up, even though it might seem on the surface like, hey, Turtle Beach is being offered a pretty good buy price. Why don't they just sell the company? But that's not really as simple as it gets. You have to see the credibility of the buyer. You have to see if the buyer is really willing to play ball. It's kind of like selling a home. If you're a homeowner and you get a bunch of buyers coming up, you don't want to just sell to any old buyer. You want to sell to someone who has financing available, or financing, to keep using the proper terminology. You want someone who you're confident would close on the property, but you also want a good price. You're not going to sell it for any old price. You have a price in mind, and if the buyer doesn't meet that, then you're not going to sell it. It's very similar when it comes to companies. And in this case, Turtle Beach is suggesting that they have a much higher intrinsic value than the current share price offered, and they're not confident in Donerail, the buyer's actual ability to buy the company. In any event, thanks for stopping by, and be sure to hit that like button and the subscribe button before you leave. But until next time, take care.